Okay, so this is going to be a very simple video about how to actually pull the trigger on a trade and get instant execution. So this is very appealing if you think you know where the market's going, because you're like, oh my God, look at the tick chart. Let's go. It's going up. Boom. It's the boom button. And so somebody asked me, do you have a trading course? And I say, well, if I had a trading course, this is how it would look. We're going to risk $10 to make $10, and it's an at-the-market execution. And this is your trade. This is all you're allowed to trade is buy and sell versions of that. You don't have to pull the trigger, but this is how your gun's calibrated. This is how much it costs to launch a bullet. Let's just imagine that you're not going to hit anything, so you're just blowing bullets off that cost $10 a piece, possibly. But every bullet that you launch, you're still stacking up in 10 trigger pulls. You're still at $100 a risk now. Now, if that's all you could do in your whole world is get down to this baseline that this guy's talking about, to me a baseline means what is the crudest rules I could ever come up with my trade plan is if I only traded once a day and risked $10 a day, how long would it take me to blow up my account if I was wrong every fucking time? And I also don't have to wait to make the $10. These are break-even scripts, okay? In the common area of the platform of MT4 is the only place you can launch a double click, here or on a tablet, because if you go to the favorites and you double click, it's going to bring up the editor. And the last thing you want to do if you think you know where the market's going is hit that key. That is a giant C blocker. Okay, that is not trading at the market. And it's not that you can't trade at the market. And these kind of are ridiculous orders. These are $10 risk per trigger pull. Not that they're going to run the market down 100 pips after you pull the trigger, but how often do you pull the trigger per day? If you wait to the end of the day, so picking the time frame of you're only allowed, you really have to set up some primary. I get that you can trade intuitively or counterintuitively and all these other things, but you can also trade, and we're just talking about market orders only. You're only allowed to trade market orders in module 1 of the trading course, because you open a demo, and another thing is that as soon as you commit to the entry, you're psychologically in that trade, as opposed to the other techniques of entry where you're not going to get in unless the market comes to your price. Here you're entering the market and saying, no, we're going up or we're going down. Part of you must think that, or you wouldn't pull the trigger, directionally speaking. You would put out a hedge maybe, and you could still do that. I guess I didn't mention that, but I guess if you wanted to say, well, can I buy and sell at the same time? Sure. You just know you're risking $10. I mean, if it makes you feel better to be in a hedge, I mean, it's all about feelings, isn't it? That old song. Because people want to feel like Fibonacci's working for me, I think. Should have gotten the 618 pullback. Look at this fucker. I mean, part of you probably was like, that's good pullback. 618 didn't quite hit it, but it's a pullback. I'll take it. I guess not being too picky. So here in this, I'm going to just upload the 2 tickets that I just wrote called sell at the market with a 100 pip stop to make 100 pips, and this is the sell with 100 to make 100. And then we have the cleverly named buy at the market, risk 100 pips to make 100 pips. The inversion of that is here. So those 2 I would put in. I'm going to put it up on this Hightail site in a folder. And it, what you do with those 2 trade plans is entirely up to you. Now, you could build a position, knowing that you're risking $10 per thing to make $10 on the way out. You can also change the code in there. So if you open this up, you right mouse click and go modify. Ignore the fact that this says 15 minutes because it's a market order. It doesn't matter. That's just left in there because I had these other scripts I could turn on. So I could buy at the market and I could put a buy stop in. If you delete these 2 forward slashes, you will turn this ticket on. This has a entry 2.2 pips above the ask on a stop, but we won't get into that. But for extra credit, okay, you turn these on and you got a whole fucking playlist of shit. You could be getting it at the market with a 100 pip stop and you're still buying on limits 3.3 pips below ask. Simultaneously. Okay, now you can see how it just becomes a rabbit hole of insanity. But I'm just saying, in Module 1, how to trade with a 100 pip stop, or how to swing trade, I suppose, or trend trade. Or just, you're really going to put some room on this ticket. 100 pips, it's pretty liberal. Maybe if you're a liberal, you'll like trading this scheme. And you can put a sound on here too. If you turn on the sound, you can make a whatever sound you want here. Just take this forward slashes off. Put in your WAV file inside of the folder where the sounds are inside of MT4's folders. And then you're on, you're off to the races. You can have like some, sound of some banshee screaming or something, whatever sound you want to have, or like, hey, wow, you really believe in this trade? 100 pip stop, really? Look at this guy, 100 pip stop. Yeah, he's a swing trader. I don't know how long the WAV file. I guess it can play like 30 minutes of like violins playing. You really have to, and you could have for the limit orders, you could have a whole nother thing, right? Or it sends you an email or some bullshit too. I think you can have that, right? It emails you going, you are about to get filled on a massive order bank. I hope there's enough money in the account. So whatever. But this is the starting point. And then let's play back and try to utilize this in a crude manner. I'm just saying that if you had to trade at the market, and this system I call, if you are trading with this wide stop, it says something about the kind of trader you are, maybe. And if you only traded once a day, and you don't have to pull the trigger, but if you only had criteria for once a day, is it oversold or is it overbought, and you just kept it to that, that'd be your crude kind of beginner. Okay, I see what's going on here. Of course, if the market moves 200 pips, is it viable to put any 100 pip stop at that point? Maybe not, because the market is on fire. Something exploded. This is where you can't just say, well, I wrote this wonderful risk plan and everything's great now. I feel like I'm armed. I can go out and just, when I see an opportunity, I can pull the trigger. Well, this is completely incapable of when the market starts to just come unwrapped. And now, unless you have a trade plan that can get in on the flags or the sideways action, you need another entry technique. Okay, so that's why you can't just live off of market orders, although maybe you could. I think if you could be awake 24 hours a day and you could have your attention, every hour you're looking at the market going, okay, I see. But at some point, this also means that when it gets to that one price, you have to be awake for when it gets to that one price that is the price. That it just so happens to be ripping into what we all know is support or resistance, where all the people that use limit orders are getting filled massively. Or people that are awake that pull the trigger. There's somebody that's awake pulling the trigger on that trade. Let's think of it that way. The bankers are awake 24/7. Apparently they have a staff. All right, we just can't compete with the banks. Can't be awake 24/7. But this is the sad fact, is that if you're going to risk $10 to make $10, and that's your trade plan, okay, that's your square one. and you're out of the gate and you start doing that trade plan. And that's just the way to look at it. Now I'm going to play back the market with my trusty strategy tester, and I'm going to try to implement the trade plan in my crude swing trading method, where I'm going to do counter trend trading, I suppose. I guess I'm going to call it counter trend trading with market orders, 100 pip stops. I'm going to throw up my 100 pip grid so I can kind of gauge my risk here. Go for the trusty ATR. I'll just call it that. It's not the ATR. Oh, it can't switch time frame. Sorry. I'll try to fuck that. Okay, well, let me zoom in and speed it up a tad. Get a little deeper into the story of it, the meat of it here. Uh-oh. I think I blew it out. Wait. Oh, shit. Wait. Oh. Yikes, that was an old playback. Wow. That was a tremendous move. I don't think that. I think it's real data. Oh, wait. Okay, let's speed this up. It's real time. It's a little difficult real time here. So this is pretty fast playback. Okay, we're going to just, my criteria is I'm going to counter trend trade. I'm going to, what do you call it? I'm going to, I'm a contrarian, so I'm going to do contrarian. If you say it's snowing, I say it's raining. So here's my entry here, right? Anytime we're below here, I would have pulled the trigger, and anytime we're down on the day, I would have pulled the trigger. I'm sorry, that's not true. I would, if I had to trade at the market, I'd have to wait till we were down here, and then I'd buy. Assuming we're below the floor. 100 pip stop. So if I didn't take 50 off the table there, that's my bad. Trading at the market. Also, would I have sold here? I think I would have. This is a structure sell at the market. We make it back to here. So you could have, at the end of the day, said that's a place to sell. We're waiting for the end of the day. In this market order scenario, waiting for the end of the day, we're up here, we sell. I think they're going to stop on you, though. I think maybe it's done tanking. Of course, if it's up, we are going to sell. If it closes up, oh no, we made. Look, they didn't stop hunt us because we have a 100 pip stop. And we could have bought maybe back at the market here. We're allowed to buy counter trend trading. Don't forget, I have a very crude system. It's counter trend trading, so I would actually buy that. I'm counter price pulse trading. Literally, if it's up, I'm selling. If it's down, I'm buying. Just binary trading. Okay, I sold up here, 100 pip stop. I survived that. I cashed out. If it's down, I'm going to buy at the market. Okay, this is just the crudest trade plan in the world. End of the day, if it's down, I'm buying. If it's up, I'm selling. Complete contrarian trading system is really what it is. Can it get destroyed when the market goes into a very fast, deep, high velocity move of a lot of pips? Yeah. Sure, because the ranging doesn't pay off anymore, and the pip range is so big now that it's crushing people, right? So here, I would have bought at the market, and they just stopped me out. I would have bought at the market. I'm still in. Just kind of playing back a 100 pip stop. Let's ignore the fact that there's a big hole down here, but we're just going to stick with the trade plan of if it's down, we're buying. If it's up, we're selling. Now, later on, you could write a script. You could do it immediately. Instead of a 100 pip stop, you're going to have a 50 pip stop to make 100. Or you're going to have a 25 pip stop to make 100. But you would have to build that based on, are you comfortable trading at the market in the first place? Does it make sense? Can you check it every 4 hours and say, you know what, I know it's kind of a shitty price, but you know, I got time for this. I'm going to put a $10 risk on it, and I'm just going to say, fuck it. I might be $3 underwater before I'm up 100 pips in this trade, but what am I going to do? Now, I'll be buying on close here at the end of the day. Right here is a buy. Buy at the market. I would have bought at the market. Each day it goes down here. Right, so I'm counter trend trading. I'm a contrarian guy. And here I could have sold on this rally. If it's, you know, So if it's up, I'm selling. If it's down, I'm buying. If this really gets crazy, though, that's when, okay, that one trade plan is okay, but now you got to have the 50 pip stop. If the market quiets down, now you're going to pull the trigger on the 50 pip stop, right, to make 100. Market goes sideways. Okay, so the breadth of the move, there's nothing we can do about after the market has moved. But when it has moved up, it's time to sell. In this system, I'm talking about this one specific system. If it's slightly up, we're going to sell with a tighter stop than if it's roaring up. I know it sounds really weird, but it's the only, for this market system, try to get the market without limits. There's no other choice, okay? Because you don't have a choice. You've told yourself it's a strict market order system. You have to stick to that system there. But you don't have to just run that system. You can run bracketed. You can wait for a small bar to enter. But that's a completely different system. It's a whole different vein off the tree of trading. Trading at the market is really something that, you can become good at. You can just say, okay, I know my risk here. You could put a 300 pip stop. You could have a 50 pip stop. It could all be market orders. At the end of the day, you're going to buy. At the end of the day, you're going to sell maybe. What's your criteria? Are you going to chase it? I would never fucking think of doing that. Now, you can do that, and you might make money doing that. I'm not saying that you can't make money chasing the market. Like, it went up here and you bought, so you bought, so you bought, so you bought, and you're up on this trade. You're like, literally, you are pyramiding into this thing. And every time it goes up, you're just going to keep fucking buying like an idiot. But if you don't know where this factor here, right, there's going to be so many fuckers selling in here that it's just going to blow your mind. They probably already just sold this, right? Now, the counter trend guy that's selling into this, if he's not scalping out of something, he's getting annihilated too. He sells here. He only makes this. He sells not even, well, here's his first sell. His first time to sell is this rally up. Now he's going to get clobbered. Yeah, because they're going to go after this looming vacuum. They're going to spike into that shit and rip it back. Now, he sells at the market again. So you're really being the guy, the banker, that's going to say, yeah, every time it goes up. I mean, you can read the books about people that have done this trade. Every time it goes up, they sell. They're like, are you fucking nuts? They go, are you fucking nuts? Would you buy up here in this fucking vacuum, this fucking insane treetop? Okay, so you buy at the market here, it's down heavy. Buy at the market. Wait another day. Don't forget, you sold here, you sold here. This trade's actually a fucking winner now. But wait, if that's with a 200 pip stop, say, you got to be realistic. And I'm talking about contrarian trading at the market. That's your signal is if it's up, you sell. If it's down, you buy. That's it. 100 pips stop to make 100 pips. Now you can adjust these. I'm going to publish the buy and sell at the market. You can build whatever you want off of this. You just right mouse click on that and open this up and put in whatever stop you want. Now it's going to say 1,000 in there because it's a 5 decimal broker. The 1,000 means 100. These are not engaged because the switch is not turned on. 2// turns off that ticket. So unless you want to go fucking extra credit and blow up your account, do not touch these. Okay, some guy asked me, can you have a complete sentence? Well, I don't know. I hope that helped. I'm trying to explain it as best I can. Here, okay, let me just do just closing out the video. If it's up like a motherfucker, you sell. If it's down like a motherfucker, you buy. Up like a motherfucker, you sell. Okay, this is a market only, but you still have to take something off the table. Yes, if you're just not going to go on forever in this gravy train, because at some point they're going to rip it down here and just blow fucking people's minds. Like, when it comes down here, people are going to shit their pants, okay? But not the end of the day market order guys. They just bought that and they're scalping to here, right? They're like, oh yeah, we just buy when it's down. We go against you. We're anti. Just fade no nonsense Forex guy. I told that guy, he pissed him off really bad. I said, well, I just come here to fade you. Look at, they trap below the floor here. You think that, oof, that's the auction that's going on right now in the 4-hour euro dollar. We have the same setup right now. Like, the moment of truth, are we going to fucking come down here and blast the fuck out of every bull stop? Don't forget, Jed and Hank have their stops back here. Okay, so we're I guess the course is over. This part of the module, I'm just going to talk about where everybody has their stops. So trading at the market for goobers, module 1, how to swing trade at the market. Of course, you know, for professionals alike, you just hit the button, boom, you're in. Let the rest, you know, worry about itself. Here we see the big seller window. They crushed it. They pulled it back. This is the daily chart, man. They took it all the way back to the starting gate here at the 100. Is there going to be a stampeding here? Are we going to see this glorious crush of this again? This was the first attempt and it fell back. Oh, wah, wah, wah. Came in, stop hunted these goobers. Never got me and Jake got our stops down here. We're warriors. We traded this flag here. Oh, we just cashing out now. Oof. That's what I'm talking about. Oof. Now, this is a prime example. When this goes up 300 pips, maybe you shouldn't trade with a 100 pip stop. Maybe that's too tight. Like, you're really at the mercy of the velocity of this thing. And this is the whole thing about the funniest thing about the no-nonsense Forex guy is I don't think his algo can see this rogue wave coming. Ruh-roh. See, now there, you didn't even scalp 50 pips off that fucker. You would have had to sell on limits into that fucker. Unless you waited at the end of the day, you did not get the best price. Looks like you might make some money here, though. If you trade with a 200 pip stop, it went up 300 pips. Could it come back 150? Well, it's certainly better for that one trigger. For that one button you pressed, it's sure better. But yeah, this is when it gets squirrely. Look at the sideways action here. It's setting up for some type of anger. It's either going to come ripping down or ripping up. I suspect a subtle little stop hunt. That could have been it. That could have been the last of the Mohicans right there, that little baby wick. I think they're going to crush it north now. So some guy's selling into that. There's just, I don't even see how it's possible, honestly. I mean, now if you look at this big picture, you're like, holy shit. What if they come up here? You're like, no shit. Let's not even think about that. Let's first get it to here. Oh boy, they just made a new high. Look at that. Oof. Bam. Okay, you're selling at the market there, no questions asked. You're going to try to scalp that. They're going to blow you out with a 100 pip stop. They might blow you out. Oh, wait. Oh, you're going to sell. Again, you just sold at the market. You're a contrarian. In this system I'm talking about here. So you can see that you can't just live off. You could, but here you would have had to scalp out. You would have had to get out of something there. I'm sorry, because you have to buy. Don't forget, at the end of the day, you got to buy. I'd say you better get the fuck out of whatever you sold up here. And now you have to, if it closes at the end of the day up, you got to sell. But you can't have a robot go forth and do that because it's the amount of the movement that's going to matter, you know. That's what's critical, is the amount of the movement. Oh, look at this nice come back to the, just stop hunted at a 10 pip window there. Took out this guy's stop, his trailing stop. I guess we could talk about the trailing stops though. And are you running a trailing stop on this system? You know, look at this nice pullback here. That's a 100 pip winner. You just bought because it was down. You're going against. I guess you're trading the backbeat of the market or something. Want to call it that? Anyways, that's it. Trading at the market. Double click. Double tap on the tablet. You can put any stop you want in here. Build a trade book. and you're off to the market races, and then the rest would be limits and stops, and I'll do the limit and stop thing, which have time decay to them, and then when we go to limit and stop module, it'll be this. So we do the I guess we'll do the stop entries next, because limits, I guess, is the most complicated thing. So the stop entry, people can, they're used to that kind of method of entry. And then you can kind of bracket the market, and you can do hedging. You can do breakout strategies. Makes sense for the break of your entry tickets, certainly. And then we would do the final module. It's just a 3-part course. The limit check tickets. And it's the way that you use them, that's certainly up to your discretion. But, those 3 styles of entry should give you at least some way to fit it into, the end of the day trade is completely different than the end of the week trade. And the end of the week trade may have to have a really fucking wide stop. But those are completely legitimate. Counter trend trades, of course, I'm talking about counter trend. The trend trades are going to have tighter stops, though. See, a trend trade would have a tighter stop, because you're saying, no, this doji breakout is going to be a continuation. This whole video so far, I'm talking about counter trend, counter pulse swing trading at the end of the day. But if you're going to trend trade this in a stop entry mode, you're going to run, or even a market order mode, when the market's down a little bit, you're going to buy with a tighter stop to make more pips. The ratios are better. You're going to risk 20 pips to make 60, 20 to make 40. Because the market's really quiet, you can do that. If the market does heat up and does a stop run and you get slippage, because they crushed you out, well, it's either that or you blow up the account, I suppose, or you just, it really depends. Look at this thing. Look at this slightly up here. So slightly up here is a tight sell because it's slightly up. So if you're going to trade at the market, you got to have a shallow stop and a wide stop. If all your bullets are in the gun, you have no landmines you planted, you have no other method, then you're going to have to say, well, this is going to be for that. That's going to be for this. If we're down 200 pips, I got a 200 pip stop ticket here. I can just, boom. It's on deck, ready to go. And then you could trade more currency pairs with a 300 pip stop, but now you're going to risk $30 a trade. Now you could do that. At the end of the week, you're like, holy fuck, let's just get in here with a 500 pip stop. Fuck them. And if it keeps tanking, I'm going to keep accumulating with the banks. If you look at the bank indicator, it's just going a little bit. It's kind of like a super hypersensitive. Just take MACD and make it very sensitive. Put it on 13. Put everything else at 1. Put it on 13. You're just looking at the histogram between an EMA of 1 and the histogram, a 1 period moving average against a 13. Just the pure histogram of that. You just take MACD and you set it to 13. In this way, you're just looking at, this is the loss of momentum, and maybe we're going to go the other way. I'm going to go sideways. We're going to get trapped in this zone. Where are we at structurally? And of course, if you're trading at the market, you can make this argument that we are at a top becoming a bottom right now. We're at a pivot, and this is another reason to pull the trigger. But I would only pull the trigger if it was a counter trend move, because I'm going to get the better price than the price before. Well, so here's a prime example. Do you see that? Did you see that rip there? So this is down like this. At the end of the day, can you buy this? At the end of the day, you got a 300 pip stop? You're going to need a 300 pip stop now. 300 pip stop. And look at all the pressure building up. Now, this was the staircase to heaven. We never had a lower low. This thing marched its way up the staircase. This is the prices Right, Yodler guy. Look at this thing. Are you kidding me? Jeez, look at this. And they just kind of like, once they reach this top, and it's all like, ain't no way they're coming after that. And then they just crush it. And here comes the auctioneers. They just cashed out. All the scalpers just had their way with that. Now it could go lower. Here comes the more buy limits stacking up in here. So how are you going to play that? I'm sorry, I'm going to the limit course, but how are you going to play this at the market? So if it's down, I pull the 300 pip order, right? Because it's down 300 pips. I have a 300 pip stop. It's on 100. I have a 100 pip stop. Just to use ATR bar by bar, the last known price pulse. We're not going to look back any more than that. Fuck it. It doesn't matter. Dude, if this is down 120 pips on the day here, and you got a 120 pip stop and you buy that, you made almost 150 pips from that retracement. If you held through that. That's the if you held through that. But when this is blistering down like this, look at this. Are you ready to buy at the end of the day? Well, I'm probably getting filled on limits right now, but at the end of the day, I'll buy. You know, if it's down, okay, here I just bought at the end of that day. Okay, so everybody made money. Everybody made their 100 pips. Look at that. Nice and easy with a 50 pip stop there. Another successful trading day without any moving averages. It's also supply and demand. If it's going down, it's oversold. This is the crudest system in the world. Okay, if it's down, it's oversold. If it's up, it's overbought. You buy over, forget stochastics. What the fuck? It's up, sell. It's down, buy. You know which ticket to use, because if it's down big, you have to put in a buy with a wide stop so you can survive the retracement. Okay, it comes to here, maybe you get out. Trade's over. You bought down here, you sold. It's up, you're going to sell, right? You can see they hunted these stops. They've had their fill. Now they could rip it back. They really want to hunt this guy. This will be insane. Somebody scalped off of that. You're selling at the market. With a 200 pip stop, you will sell once again, depending on how far this closes up, will determine your stop. So as it's coming at you, here you sell with a 100 pip stop here. Only went up 100 pips or 50. You know, if it comes down here, you got to think about getting out. Right? If they stop hunting the bears, you're waiting for another update to sell. If it comes down, you're going to buy. Right? If it comes down, you're going to buy at the end of the day, which means you're going to get out of your winning sell. Okay, that would have been your take profit logically as the first stop hunt. And you bought back at the end of the day. Now, how much did you buy back? And now are you slightly up? And right, so that's another thing. That's when you'd have to say, no, you know what I'm going to do is I'm going to have a very feathered out system. It's going to be 20, 40, 60 pip stops. I know when to trade at the market. I know when to wait for them. And it's a module 3. I know when to have them come at me and come into my limits. Module 2 is, I'm not worried about it because I'm trailing buy stops above me here that last all week long. So I'm long right now on default. You know, I'm not worried about it. It just went up. I sold everything. I'm short now. Okay. When we come down here, they're filling my limits now. But at the end of the day, I bought. Okay, so I just went long. Looks like a dead cat bounce. It looks like they're going to come to here and just crush it to here. Looks like you're just going to keep crushing. Should I scalp out to here? Well, I have to on something. I have to. You can't ignore this bottom that we just took out. Just because you bought at the market doesn't mean you can be blind to structure either, I suppose. Trading at the market. Because trading the market is a whole different mindset. You're really not looking for these, and maybe that's what was confusing the guys because I was throwing in all these different trade plans, but If you just have your mindset at the market, like I'm only able to pull the trigger at the end of the day, so I had to wait to the end of the day here, even though they went lower the next day and I could have got a better price on limits, but I bought here, right? Just got to follow my trade plan. Go against no nonsense guy. Okay, so if it's up, I sell, right? If it closes up, I sell. Okay, so there. And maybe I'm out of everything that I bought down here. So if I bought and I sold one, now it's up big. I have to have a very wide stop now. Okay, I just sold with a 200 pip stop. If it comes to here, I'm probably going to have to get out. I'll wait till the end of the day. If it's down, I got to get out. Okay, I got to get out. I'm out. I'm out. I'm flat. Fuck them. I'm going to sell I'll buy if it goes down. So this is where it's, with 20 currency pairs, you could probably do it, right? 100 pip stop. I'm buying here. I got the 50 pip stops running. We're down 300 pips. So I'm going to buy with a 400 pip stop. And then the market's telling you how wide a stop to use. Not your accountant telling you you're only allowed to risk 1%. That's just harebrained. Like if you want to do something, like anybody that's made a really good movie has spent so much and gone so over budget, they're like, oh, I can't fucking believe it. Let's get it all back. Look at that. You finally made money on that fucking dumbass trade system where you sell high. Look at this. Well, we did run a big stop here, though. It was up we had a 150 pip stop on that sell. And look at it. We bought back, bought it back to here. Gee, I wonder why it came back to here. That's crazy. How is that possible? They just stop under this poor goober. Okay, we sold. We're out. We're flat. We're done. You don't have to trade every bar either. We'll wait for it to close up hard. We have the hard orders. We have the soft orders. We have the tight stops. We got the wide stops. We got them all. Whatever you want. Whatever the market's telling us. Oh, look at this bitch. Look at this thing go. Oof. So here you could have bought with the shallow. You wouldn't have been stopped out. It's down a little bit. Buy with this nice ratio. Oof, you made a nice 20 pip stoppers on this. So the fact that the market's slightly down tells you use a tighter stop at the market. That's your other criteria for the system. It's counter trend trading. Market's telling you how tight a stop to run by the movement, right? So small movement down, tight stops. Small movement up, like small movement up here, tight stops. Sell. It's counter trend trading. Contrarian trading, it's called. That's why. So I guess I have to say that's if you have to claim my market trading technique, I'm going to claim I'm counter trend trading it, or I'm going against the price pulse at the market. Doesn't mean that I wouldn't trade in the direction of the market either, though, because when the market moves a baby move, okay, it moves up hard, then it goes baby move, then I would put in baby tickets. Right? The market's telling you what kind of ticket to run by how far it just moved. I don't know if that sounds too crude or too simple to be true, but that's what it is. I mean, like these are baby moves here, so very tight stops, very wide take profits. Here another time to come in with the tight. If we get into a tight range, we're going to run tight stops. And we still have the scalps built in, which are the tight take profits. So here we buy, or we sell. We can go to a hedge here too. We could put on a hedge here that has very tight, and some of it might get whipsaw, but look at this, did not get whipsaw. There was no fill on the buy side of that, right? It's a whole different trading plan when the market gets really quiet. So in the daily chart here, let me play it just a little faster forward. Okay, so this is pulling back really fast at the market. You're going to just call out the trades here. Okay, selling with a 200 pip stop here, selling with a 200 pip stop here, 300 pip stop, 400 pip stop, 500 pip stop. Oh, how do you like it now? Now, let's not forget, those are just the sells. You still would have had to buy here, baby pullback, run a moderately baby. Like, how big is your baby, by the way? Oh, he's a big boy. So look at this catastrophic move here. Now it's just range trader heaven. Buy, sell, buy, sell. These guys are just having a riot. Oh, look at that. The 100 pip, the 200 pip swing trade there. How nasty. How the oh, look at that nice triangle formation, breakout. One clean breakout, now complete insanity, hysteria. Are you selling into that? You need a 300 pip stop. If you're buying into it, you only need a 40 pip stop. See how that works? The market's telling you, I'm down a little bit. You could go long or you could sell. If it's up 300 pips, it's telling you, dude, you're going to need a deep pocket. And let me see if I can just slow down right here to show you that if your pocket was deep enough pip-wise, you mean to tell me, and this is where it just blows people's minds, that your stop, tightness of your stop, does speak something to what you're planning. If this market is up this fucking far in 1 month, if you're trading with a wide enough stop, yeah, you could have cashed in all the way back to here. And I suppose if you really wanted to, there's a bottom become a top here in the daily, you could have added to the short side and said, oh, we're going to go here and we're going to hunt this fucking shit. You've really got to ask yourself, how long do you want to be in the market? Because here, this scalp to the floor here, that's plenty. I don't really want to be in the market longer than, let me see if I can zoom in. Okay, let me just see where we're at right now in this trade. Okay, I'd be out. Like, why, if I bought this thing down, and I cash out into here, right? Isn't that like, aren't you good? That's such an easy scalp. It's like, it's also a sell setup for somebody probably that's like, yeah, this is the floor. Okay, that's going to be where they are going to sell. You want to get out where the guy's getting in, don't you? You got to be able to see the other guy's trade. And this is end of the day trader here in this system. So the 100 pip stop I'm giving you with the 100 pip take profit, you're going to have to write the 25 to make 40 and know when to hit it. You're going to hit the 25 to make 40s when you're in the quiet times. Or you're going to run a 50 pip stop to make 150 pips. And you're going to, at the end of the day, you're going to pull all three of those tickets. At the end of the day, you're going to hit the button on 5 different trade plans, whatever the market's telling you it needs. If it's slightly up, you're going to sell with a tight stop. If it's slightly down, you're going to buy with a tight stop. If you do have a clue of structure and what could possibly be going on in direction, then you are probably going to trade in a directional manner. Here, it's slightly down. You're going to load the fucking wagon with a tight stop. And you're going to wait for it to crush up here. And when it comes down a little bit, you can buy more with a tight stop because it's a slow drift pullback. You want to buy the gentle pullbacks if you're a trend trader, because when it starts to rip like a whore like this, it's beating you up from a standpoint of you could only enter the market with a 50 pip stop to ride a 200 pip move. Now you're talking about ratios that you could be wrong 40% of the time. But you're going to churn the account if you get too many fills, even though it is a tight stop and all that. You know, the spread is going to matter. So here, this is the British pound, by the way, daily playback. And of course here on the 4 hour, if it's slightly pulled back, you could get in with a 20 pip stop or a tighter stop than that. Right? Because look at this auction on the daily. I'm sure that on the 4 hour, there was another baby auction in here on the 1 hour. Well, you know there was because you can see the wicks. So you close beneath. The other thing is that if you're buying underneath the structure entry at the market, like if you can see this at the end of the day that you just closed beneath this low here. Okay, this is going to be what's going to alert you to go, okay, we just got to buy at the market here. There's all there is to it. In case we come back to here, this floor is rejected, and we come all the way screaming to here and make it all the way to this top. And we would sell here anyways if we're going to blindly sell at the market. This is the structure on close here that becomes the reversal point, and then this is the failure to tank, which makes the first goober draw his first trend line. Or maybe your moving averages are completely, perfect, and they're going to catch up like this. And anyway, so let me just, I say for the guy that scalped, he's already out of this thing. I said the sellers are going to come in here, but can they pull it down into this hole? Well, for the guy that waits for the end of the day, and he says, if we're down 80 pips, I'm going to get in with 80 pips stop. If we're down 120 pips, I'm going to get in with 120 pips stop. That's a completely viable, measured move, kind of like you're asking the market to continue with the last rate of change. The very last day of movement. You can't get more current data than that. Okay, anything else than that is a lag. If you go back 2 days, 2 days don't matter. It doesn't matter. Market doesn't give a shit about 2 days ago. Only from the voids that have filled up. But I mean, as far as what just happened, if it closed down hard, people are like, holy shit. Now, there may not be a dead cat bounce in that. But if you're trying to accumulate us in a swing trade mode where you're going to trade that style, right? You still need to have execution trade plans that you're going to pull the trigger. Right now, if this closes beneath this floor, I will pull the trigger. If I wait for the end of the day, and of course you'd need more discipline actually with a loaded gun like this where you trade at the market. What the hell was that setting at the top? Chart offline. Oh, okay. Yeah, so you pull the trigger now because you're trapped underneath the floor and it would close down. You would have bought anyways, but you're buying now because this is a true structure trapped beneath the auction floor and close. Wow, not a good position, right? For the guy that sold into that, he's like, this better keep tanking. This is a breakout. This is a trend. I'm just saying that there must be some guy that says this is going down, and he might be right because he was right on initial, right? He was right when he sold. Of course, this wick happened the previous day, but right now he's right, and it could keep tanking too. But if you're an accumulator, right, if you're hoarding this thing, you're going to buy every chance you get. If you love this thing, you're going to buy it here. You're going to buy it. If it closes down beneath here, you're going to buy it. But you got to wait one more day. Okay. So trading at the dailies, I'll be trading against, actually, in this scenario here, we're going to trade against no nonsense. When he's selling, we're buying. Guaranteed. So that makes me feel good right off the bat with this system. Module 1, fading, no nonsense. Lynch a goober. Forex.com. Here's where we're at in the bigger picture here. So this auction looks like it's unsuccessful. Or in other words, we went unfair here, and now it looks like we're potentially going to engulf. I slowed the robot down quite a bit, but it's all about the pips here, right? So if it's down here like 70 pips, I can trade with a 70 pip stop. Now, I'm giving it a lot of room. It doesn't mean I can't pull the trigger. I'm assuming I'm going to pull the trigger like at a certain time of day every day, and I'm just going to decide how tight it stops, how wide, how many scalps I'm going to launch. You're launching a scalp at the same time you're launching your market order. Or you combine it into one key, which I wouldn't recommend because now you may become just, I only want to get in with an 8 pip stop here. I don't want to get in with a whole fucking 100 pip stop. And this is where it becomes really up to you as far as how complicated you want to make your life, or how simple and clean you want to make it, or how spelled out you want to make your trade plans. How the discipline is in the script is in other words, that if you title the script, okay, sorry, I didn't script this out. the title of the script should tell you what it's going to do. And you could say market. You could, on the tablet, I've taken the name of the order down to the smallest amount of possible. So vertically speaking, on the tablet, I have the most screen. I run the tablet vertically because I can see market depth better. I can see the depth of market better on the tablet than I can on my desktop, because the desktop's a landscape mode and it's this dreamy adventure of like this look back into all the wonderful setups you missed. Whereas to trade the market as it's coming at you has to be the hardest thing, I suppose. Here in the demo, I'm playing back the market here, but the sellers at the end of the day, they just sold here with a wide stop. It's up hard. And if you see, you really can't do the other trade now because you don't have enough signals. But on the 4-hour, you could have bought with a tight stop against your big up move on the daily. Also, you could have a 4-hour robot trading against the daily robot, so it's taking advantage of the stuff that the other robot doesn't see, and that's just on one instrument, right? So it gets very complicated if you truly think you're going to write this algorithm that's going to do, it's just so beautiful and wonderful. I can already see that Forex Goober probably went long here. So he went long here, and we went long down here in the trap on limits, and we just went long here at the market actually too. So don't forget the market orders here we got in on. And we were able to use a 75 pip stop here to make 150 pips, right? Because we're expecting, if it's down a little bit, if it went roaring up and it's down a little bit, it's going to keep roaring up. The next price pulse could be another. It's a high probability that it's going to keep going, right? Once in motion, stay in motion. But if it's truly noisy, it's so noisy it's ranging. Okay, but this is also time frame dependent. What's one man's noise is another man's trend, you know. I'm sure there's going to be something where the monthly people are going to say, there's zero noise on that chart. Dude, there's like, unless you're going to crunch it down into some fucking scrunchville of like 50 years of data, right? It's going to look like, wow, this is fucking profound looking structure here. So, anyways, yeah, so that's, oh, don't forget you would have sold at the market here with a wide-ish stop, and you're trying to scalp this back to the starting gate. At this point, you're hoping they take it back to here. Right? Isn't that your hope? Of course, if it's down a little bit, we could buy at the market. The day's not over. Let me speed up the playback here. And every year is going to be different, and summer doesn't have to be slow. The idea that summer's a slow time for Forex is the fucking most hilarious thing I've ever heard. Like, well, you know, a lot of people aren't. Well, you know what? Somebody's trading it. I mean, it seems to be moving as far as I can see. Even on this holiday here, it's moving. So, I don't know. End of the day, we'll see. But, so this is going to be trading at the market. Let me speed it up. How to trade at the market. I'm going to speed this thing up considerably. So it's going to be hard to think about. We're going to have to think quickly. I'm using the crude playback so I can play back very quickly. We would have sold at the market there. I wouldn't recommend it, but we would have done that, mechanically just speaking, in this system. If it's up big, we sell with a wide stop. That's just the system. Waiting for another punch up to sell. If it's slightly down, we'll buy with a tight stop. We'll be cashing out of some of our, well, no, we have to buy with a tight stop there. We're still short, but we're long with a tight stop. And maybe it got taken out of your tight stop. I don't know how tight stop was. That was could have been a 20 pip stop on there. Now we're in a hedge. We're going to sell here with a wide stop. If it goes up again, we'll sell with a wide stop, a wider stop. If it's slightly up, we'll sell with a tight stop. If it's slightly low, closes up, we'll try to stick with the roll system. Okay, we sold a little. We sold with a tight stop there. Couldn't buy it. We're just counter trend traders. You know, sticking to your guns on that at least makes you see, okay, it's about the volatility of the market is the thing that's going to destroy this system. Also on the daily, we don't have a chance to really even jump on the long train there, where we could have jumped on the long train on the 4-hour here in this slight hesitation at the borderline. But it's okay. We're going to keep selling into this like troopers. We just sold at the market with a wide stop here. And we are going to buy, if it comes down, we're going to buy back at the end of the day. Okay, we just bought back with a shallow, we bought with a shallow buy stop, and maybe we cashed out of something. We're still short, we're still underwater on our big, wide 150 pip stoppers here. We just cashed out of that. Plus, we will buy at the end of the day here with a tight stop. With a wide stop now. We just bought the market. Okay, maybe we're flat. If you did it right, we're flat. Okay, so now we're going to start all over again. The whole game. We buy here. If it's down, we buy again. If it's not, we don't touch it. If it's up, we sell. If we can have wider stops and tighter stops, we can play a better game. Okay, we just bought the market there. Maybe we're still short from the top of that on 1K. So you can see the tightness of your stop in this kind of game of it's going to go up, it's going to go down. At the end of the day, we buy. If it's up, we sell. Very simple rules. Never chasing. We're never chasing on a contrarian system. We just bought, we're long 3K. Now here we buy with the little bit tighter stop because the volatility is drying up. We can run tighter stops now. And if it just keeps on slightly going down, okay, we'll just keep buying with a slightly tighter stop. If it's ripping down, we're going to whip out the big guns and we're going to go serious, full retard here. We keep buying with a wider and wider stop because the market keeps on heating up and up and up. We're also underneath the floor here in this auction theory. We've loaded the wagon here. We got out the big guns for that. Big wide stops. Some kind of Brexit madness, I suppose. But really what it is to me, is just a house cleaning of all that big void left behind. Now we speed that up. We'll speed that up a little bit there. Trying to make this a concise video, but as you can see, the width of your stop matters. Okay, we just bought at the market there with the wider stop. We sold here with a tight stop, though. We did go with the trend here. We became a trend trader right on the spot there, so we're making a little bit of money there. Now we're waiting for the ferocious down move. We just bought at the market with a wide stop. And if it goes down again, we're going to buy with that, whatever the market's telling us at the end of the day, the most recent volatility. Okay, so we're going to get ready to buy again. Gosh, buy right there. Big wide stop. Just bought a ton with a wide stop there. Well, it's pretty tough, right? You get $20 now you're risking on each trade. Here you're going to buy with a tight stop because it's barely down. First time barely down. Ooh. First time barely flat. I could put in a hedge here. You're supposed to sell. That's a trend entry. Slightly up and a down. You sell with a tight stop. Okay, you made a few pips. Now you're trapped below this floor. This is not, this should not go unnoticed. You sold with a tight stop. You're making some money. Now you're going to run by with a tight stop. You're still underwater on your wide stops, don't forget. Your big kahuna trades intermingled with this. Now you just bought at the market with a tight stop here at the end of the day. Hopefully you took something off the table there. Once again, you bought again. You're just a fucking glutton for punishment. You just bought again. Tight stop. Maybe you're going to make it to this line. We got to clean out these guys' stops first here. Okay, so we only trade at the end of the day. Here you would have sold with a tight stop. So you get a little whipsaw here unless you get it right, the amount of movement. So you cashed out on that one with the tight stop. Commingled with the other trades. You're underwater on some of these trades still. Okay, so you're buying at the market here with a 50 pip stop because it's down 50. You buy with a 20 pip stop now because it's down 20. Okay, you're just waiting to sell or waiting to cash out, waiting for the end of the day. Always waiting for the end of the day here if you can survive these swings. Yeah, swing trading is really a feat here. This daily chart. So here you would have sold with a tight stop. You're making some money on that. Right? Yeah, so you're making some money on that. Here you sold the tight stop. You made some money on the downside. Here you bought with a wide stop because it's down big. You sell with a tight stop because it's up a little bit. Okay, you made money on that. Now you're going to buy with a wide stop if we close down. Okay, you bought with a wide stop. We're waiting for it to go up. We're not going to touch it. Maybe we're still in. I don't know how wide your stop was here when you bought into this collapse. That would have mattered too. If you're a lifer, if you have no parole, you're a lifer. Okay, you would have bought here with the classic 80 pip stop because you're down 80 pips. And now slightly up, you're going to sell. Every time it's slightly up, you sell with a tight stop, right? Because you're going against the trend. Counter trend, you're going to buy with the wide stop there. Here you just cashed out. You made a brilliant trade there. It's slightly up, you sold with a tight stop. Slightly up, you sell with a tight stop. But guess what? The day's not over, and you just bought at the market with a wide stop. It's down 80. You buy with 80 pip stop. Unfortunately, this 80 pip stop here would have been stopped out. But you sold into that with maybe you doubled up and went with a tighter stop because dollar-wise it's the same amount, right? That'd be a whole other thing. You'd have to be prepared for that also. This is just trading one instrument, though. You could trade this just from the short side. In other words, it's big down a little bit. So a slight correction means get in at the market. You're a trend trader. If the last price pulse in the daily chart is up, when it comes back a little bit, you go long, right? If the last price pulse is, so you're waiting a day. It's funny because it's the confirmation trade on top of the confirmation king, who is no nonsense. He's waiting for it to go up. Well, I say after it goes up, don't be a goober. Wait for it to come down a little bit and then get in at the market with a tighter stop. Based on the structure you're at, not on the ATR of 14, which is some fucking wackadoodle goddamn number that's probably a wider stop than even you'd ever want to think about doing. Here you're going to buy, don't forget here you're sold. Well, I was talking, but you sold, right? And here you're cashing out. And if it's down, you buy. So you bought back here. Also, here's a structure trade. You can tell your kid about the college fund you lost. Son, you don't understand. This is a top becoming a bottom right here. But so you got enough dry powder that if we do close, that you can survive this volatility, right? You're trading a 100 pip stop. You survived that. If you cashed out here, but look, if you didn't cash out, look at, but you got to come in here and buy. Now you're buying with a 150 pip stop. Wait another day. If it goes up a little bit, you sell with a 20 pip stop here. We're waiting for it to go down. We can buy with a 50 pip stop if we close down 50. See, we have to keep adjusting our trade plan blow by blow. Here we buy with a tight stop. Oh, we just made money on our sell. And we're waiting for it to close down in this window. We just bought with a wide stop. Maybe we're flat. We're waiting. We will sell with a, I would be afraid to sell here because it could be one of those traps. Like this could be the floor. But nevertheless, we didn't have a chance. We bought a little bit with a tight stop. Look at that. We bought a little bit with a tight stop because it was slightly down. So it's a very binary criteria here too. Think about this trading system. I would call this trading system market order trading system. You know, you're you can see how you would play this from a limit standpoint later on in Module 3. In Module 2, the stop entry, the low volatility breakout system, which is, I'm not a big fan, but I know people do this. Put a buy stop here. I want confirmation. I'm going to put a sell stop here. I want confirmation. I think it's a little wide. It's too late there. I put a buy limit down there, but myself. But here you could have sold here. Now here's why the market order is going to blow away the stop order. If it's slightly up, you're selling with a tight stop. That trade worked out good. If it's down bigly, you're buying with a wide stop. You are now cashed out, right? If you're going to get out where you got in, if you buy right now, if you bought every time it's down, if it's down 120 pips, you have a 120 pip button to press. Not everybody has one, but if it's down here, you're getting in with a tighter stop because it's slightly going down. If it's slightly going up, you're selling with the tight stop. Right, so you have to keep on adapting to the market's punishment. Here you're buying with a tight stop because it's down. That would be my first trading course. Trade that on a demo. Trade that in here and just say, I have a simple rule today. If a market is down, at the end of the day, we'll buy. And of course, you can put your fibs on that stuff and your moving averages and say, well, you know, it isn't an uptrend. I'll buy every chance I can get. That's called a pullback. I know I'm going against no nonsense, but let's face it. This system here is back testable, forward testable. It relies on two styles of execution. Instant execution at the market, buying and selling. Can you trade like that? And of course, that's how he's trading. Don't forget. That's how he's trading. So it's about how much risk per trigger pull. How many times do you pull the trigger? Do you have to pull the trigger? Maybe you just want to get in when the market's slightly down. You don't want to get and step in front of these giant fucking moves. It may just be like, no, I ain't doing that. I'm not going to write a script with a $15 risk on some trigger pull to make $30. So you're risking 150 to make 300 pips. So you're going to write that exact script. Okay, you could go trade the guppy and all that shit because you're going to need that script. The fucker's down 250 pips in the day. You're like, boom, I'm in. Go 300 pips stop on that thing. Look at this fucking thing. So my system would have went long here because it's down big. It would have went long with a tight stop. If it's down big again, it's going to get in. Okay, it's down, it buys. Every time it's down, it buys. If it's up, it doesn't buy anymore, or it sells. Hopefully, I've just here cashed out back into this on something, and I'm going to sell because it's up. Am I start a new sell here? I guess I could. It's down, I buy. Now I buy with a tight stop. Market's telling me buy with a tight stop. Am I looking at this trend line? Possibly. I want to get in down here, though. When the market is moved too far, too fast, I have a 100 pip stop here. If this is 120 pips down, I need a 120 pip stop, right? So I don't get stopped out of that. I'm just using that as a crude gauge. If the market's up 100 pips, break out the 100 pip stops. If it's down 300, break out the 300 pip stops. Well, you know, I mean, really, you have to trade what's coming at you. When this no-nonsense Forex guy, you can tell he doesn't understand that anything can happen when he says stuff like, well, you know, sometimes the countries will come out with news and they'll fuck up our technical analysis. That's what they say at Empowered Trading. Well, you know, hopefully the FOMC is not going to fuck up our charts. You know, he drew them up just a certain way. I know you put your utopian dream on top of the chart. I got that. I see what happened. I see what went wrong there. So this will be trading at the market. Market orders 100 pip stop. I guess that's what we'll call this video. It's something simple. And of course, you don't have to trade contrarian. You can still trade Trend trading, you can run tight stops on your market orders. You don't have to run a 100 pip stop. You don't have to do that, or you don't have to go against the market either. Here you would have gone for the market. If you think this is going down, you would have only got in with tight stops on the small bars. You wouldn't even trade. You wouldn't even think about getting it at the end of the day on a tight. You might on a couple tickets here, but the way that moves so hard, it's probably going to keep tanking. You know. See, look at it's just going to probably keep pounding down. See, there you go. So you would have had to get in any hesitation of that thing's doing. But to me, the trend could turn at any moment. At any moment, we could lose that focus and the market could start just retracing this giant structure that we don't even know exists. Well, we know if we look back far enough, but like look at this move here. So here at the end of the day, you have to, right? Unless you're going to go to the 4-hour chart and you're going to sell baby rallies in the 4-hour chart and you're just going to keep on getting into this thing. But see, the market's dictating the rate and you've got to go find the time frame. Hopefully you can switch time frames. So if the market does go on fire, you can say, you know what, I need to take that trade plan down on the 1-minute chart. Works perfectly. It works perfectly on the half-hour chart based on the stops I'm running. Because on this daily chart here, you made about 1,000 pips stop. If I went to the weekly right now, you'd be like, at the end of the week, we bought. Okay, at the end of the week, you bought. At the end of the month, you bought maybe. And look at all the pressure building up here for the stop entry people, which is in my next course. Buy stop stacking up here. Oh, got trapped. Buy stops are stacking up. And do you leave these trailing behind? How long do these buy stops stack up for? So that's another thing to consider, that trade plan. And here you're getting filled, auto-filled here. I would have those delete, though. Have all those stops delete, and that's the maintenance of stop entries, a higher maintenance situation than limits. Because limits are really set it and forget it. It's supply and demand zones, but here you would have trailing buy stops. So they are in the scripts there. You can turn them on if I don't get to module 2 for some reason. Limits, I think, I would hand place those unless you're confident that the button you're pressing has a certain order density for a certain time expiration. If you hunt around inside of the files in there, you'll see limit grids and stuff like that, and that's a whole deep situation there. But I guess for the this execution that's guaranteed, where you press a button, you're in the market. That trade's active. Something to pay attention to. Here we're going sideways, so here you would be buying with a tight stop, and hopefully you can perceive this is about to go roaring north. So here's a counter trend entry, big up, right? You would have sold, buy back, sold. You finally made your 100 pips off this top here. Now you sold, you cashed out everything maybe, and you buy with a tight stop now because it's down a little bit. But it really depends how much you sold, and you sold with a wide stop here, so you're looking to make at least what you risked back. If you risk 10, you're looking to make 10. Okay, so you made your 10. $10. Now you just bought at the market, and if it goes down, you'll buy a little bit you buy a very tight stop at the market. As tight as the market last price pulse went down. It's a crude system, but it's a way to think about okay, so if you put another filter on here, say moving average, blah, 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 you can already see where the problem begins because you're not paying attention to the volatility, which is going to dictate how tight a stop you can run, which is always going to take you back to, for me, going to take me back to square one. I'm never going to make it to some place where I'm going to think that I can launch this into an indicator. It just wouldn't make sense, it seems too strict of a system. It's totally execution based. So I'm coming in to the trading on this system based on risk, pure risk only, in a caveman approach, a contrarian approach, going against the last sentiment, which would be, if it's up, I say it's going down, or you say it's down, I say it's going up. Whatever you say is wrong. But how wrong do I think you are? How many pips wrong? And if I think you're right slightly, I would go with my tighter stops, higher probability that I guess we are going up. It's switching on the fly from a buyer to a seller because the volatility of the bearish move says it's a very small pullback here. We could be going higher. I don't see a lot of people selling it. Maybe everybody's just like, holy shit, there's just only one place to get out and take a little bit of profit, and it's going to keep going north. So we just, like, if it's a little baby pullback, you're just going to get in with tight stop, right? If you're a trend trader, if the last move was up and we have a baby pullback, you're going to get in. See this baby pullback? You're just going to get in. If it's big up and you're contrarian, you sell big. And you just cashed out, say. And that's your trade. And you like to buy big if it's down, smashing down, you just bought. You're that guy, you just bought. Maybe you just scalped out. And the guys that are waiting for the little itty bitty dojis, they're going to wait. They sold here. Here comes a trend trader. A little bit up, he sells. But the bigger picture is ripping north. So you can't be blindly doing that. Of course, you know, it could be a good trade. Here, if it's up kind of biggish, you're selling. Are you a bear? Here you buy with this tight stop. It's down a little bit, you buy with a tight stop. Now they're going to whipsaw you. Because this big move down here, if you did not cash out of this big move down here and this big move up here, you had too tight a stop, then that big move here, you didn't wait to cash out the next day, and now you're buying here. Below this hole, in this hole, the lonely wick entry. Maybe you're cashed out. It's up a little bit, you sell. It's up a little bit, you sell with tight stop. Okay, they're going after this vacuum. At the end of this thing, you're going to buy at the market. So I don't know if that makes sense, but so that's trading at the market. That's system 1, module 1.